One more thing, why didn't gold surge despite rising geopolitical tensions? Don't worry, its rally may just be delayed. Recently, with tensions flaring in the Middle East, you'd expect gold prices to skyrocket. But oddly, gold's been sluggish, even declining. Meanwhile, oil prices are climbing rapidly. What's causing the seesaw effect? Let Ultima Markets uncover the hidden dynamics behind gold prices. Why is gold underperforming? To understand this, we need to address two key questions. First, what drove gold's rally earlier this year? Second, what kind of geopolitical conflict can truly ignite a gold surge? Gold's earlier ascent wasn't tied to today's conflict. Instead, it was fueled by a concept called anti-dollar confidence. Think of the global investment market as a cafeteria. For years, everyone queued at the US counter, drawn by its abundant and reliable offerings. But earlier this year, trade tensions and economic uncertainty made the US counter less appealing. Global investors, savvy diners, started looking elsewhere. Many turned to gold, often seen as a safe haven asset. Essentially, gold's rally was a vote of no confidence in US assets, driving funds out of dollars and into gold. What about now? For geopolitical conflict to sustain a gold rally, it must activate one of two key triggers. First key trigger, inflation spike. Like during the 1970s oil crisis, when Middle East conflicts led to embargoes, soaring oil prices, and global inflation, rising costs devalue money, prompting investors to buy gold to preserve wealth. Second key trigger, panic selling. If investors panic and dump stocks and bonds en masse, they'll seek refuge in gold. This requires a significant shift of capital into the gold market. Without either trigger, gold's rise will remain short-lived, a temporary reaction rather than a sustained trend. Why gold didn't rally this time? The current conflict is still a regional issue, not a global event capable of shaking the economic foundation or sparking widespread investor panic. Oil prices are rising due to supply concerns tied directly to the conflict, but gold remains unaffected because neither of its two key triggers has been activated. What could drive gold higher next? Gold's next big move might hinge on a recession trade. If the global economy falters and recession looms, central banks are likely to cut rates and inject liquidity to support growth. This devalues fiat currencies, making gold's intrinsic value shine. Understanding these underlying mechanisms gives you a deeper insight into the market. Stay tuned with Ultima Markets for more expert analysis. See you next time.